ThePrint Off The Cuff, presented by IIFL Wealth and Asset Management, powered by Raheja Corp, corporate partner AU Small Finance Bank, associate partner TDI Infratech, in alliance with Jindal Steel and Power, airline partner SpiceJet.
I don't know if this is any more of a perfect storm than it was in 2020 or that it was in the beginning of this year. But what is certainly true is, unlike March 2020, when governments had healthier balance sheets, they had much more fiscal space, and central banks could cut interest rates very aggressively because inflation was low in many parts of the world. That's not the case now. So if we again have a big hit, another big, a much more prolonged health crisis, countries are going to have to deal with it in a situation where the debt levels are much higher than they were in 2020. They have much less space to spend on all the kinds of policies that they did in the previous round. And central banks have to now recognize that inflation can become entrenched, and they might have to move more quickly on raising interest rates.
And health personnel still haven't recovered from the exhaustion of the last wave.
Absolutely. I mean, that has been tragic. The fact that continues to be the case, that we've seen wave after wave and large amounts of demands on the health system around the world. I think one of the lessons, of course, to be learned is that countries will need to build up much more health care capacity for the medium to long term in general. I mean, we could see the stresses on the systems in different parts of the world.
Have you done any modeling, or do you rely on any modeling, trust any modeling done anywhere else on what might happen now with Omicron?
We do have our own in-house models too. Of course, we have, we're building these off what the epidemiologists use, but we're also adding in what happens when you have mobility restrictions, when you have behavioral changes in interacting with others and so on. The details matter a hell of a lot. What do you assume for the replication rate? It makes a big difference if you assume it's 4 or if you assume it's 5. So these tiny changes, the predictions can be very sensitive to what you feed in, which is why you've had predictions that said, well, you're going to have a very large number of cases, and that never happened. We've had situations like that. So we do have our own in-house models. I think it's still early for us to tell what exactly Omicron is going to imply for the global economy, which is what we care about more, that we can speak to, as opposed to on the health front. But we've seen lockdowns return, travel restrictions return, and though I think everybody still hopes that it's not going to be going back to what happened in 2020 in terms of severity of restrictions, but these are very uncertain times.
Yeah. How do I explain to an ordinary reader or viewer of the print, who's not really a reader of pink papers or business channels, although I'm not sure they know very much, that how come we had 1 year of bad economies globally across the board? In India particularly, we had a decline, a sizable, unprecedented decline, as your country report also noted. On top of that, we suddenly have this inflation. And we have this global commodity prices boom. Doesn't it sound irrational?
So if you look at the global recovery as a whole, the global economy has rebounded strongly. Now, we say that there's been a dangerous divergence because we've seen advanced economies rebound very strongly, while many emerging and developing economies are still nowhere close to pre-pandemic, where they would have been in the absence of the pandemic. For instance, our current projections are the advanced economy group by next year will be back to where they would have been in the absence of the pandemic, which is a very healthy, strong recovery. So there's no doubt that demand globally has come back very strongly. So there's been pressure on the system as a whole. But the second thing that's happened is that the consumption people now spend on has shifted from services to goods. You're much less likely to travel. You're much less likely to go to big stadiums. You're much less likely to engage in theaters and so on. But you substitute that by ordering a lot of things online and having goods delivered to you. So we've seen this big increase in goods demand. So even if there was no pandemic, if for some reason everybody woke up and started demanding a whole lot more of goods, we would have seen supply chain disruptions. And so what's coming from high levels of demand, we're seeing supply chain disruptions that are there. But then there's also been the pandemic-related problems in terms of, certain manufacturing units having to be shut down because people falling sick and contact tracing prevents them from coming to work. So this particular crisis has been one where there has been a hit to supply. It has an negative effect on supply. And at the same time, globally, demand has come back quite strongly because about $17 trillion in fiscal support was provided around the world. So we've seen demand come back strong. So that is generating, and that's been prolonged. I think the expectation was that by the second half of this year, demand would rotate back away from goods to services, that we would not have these pandemic-related disruptions, and then we would not see these pressures on inflation. But that has lasted much longer than expected. Then on the energy price front, there's been multiple factors. Again, it depends, if you're talking about oil or natural gas, but there's also been weather-related effects on prices of
coal. I mean, India and China, coal is a big player.
Yes, and coal is a player. Of course, countries were trying to phase out the dependence on coal. So shale gas was one of those oil supplies that kept oil prices contained. So the expectation was that if ever oil prices went above $60 a barrel, American shale would come into the market strongly enough that prices could not go up much further. But that's not happened. And part of the reason for that is, the expectation that we're moving in the long term away from fossil fuels, and investments have gone down in these sectors. And so we're not really seeing that kind of supply response in these areas.
So at which point do you think governments will start to get exhausted? Because for them to deal with a third wave, which category of governments do you see as the most vulnerable? Nothing will happen to the Chinese, we know, because they just shut everything down and somehow manage it. But the rest of the world, would you put the world in compartments, categories?
I think everybody would be in a very difficult spot if that happens. The countries that have managed to get to high levels of vaccination rates, could still see cases going up, but maybe they would have less stress on their hospitals. Yeah. And so I think they would be in a somewhat better place, which is why it's just absolutely essential that vaccinations continue on a war footing. I mean, what we see is that whenever case numbers come down in a country, then people forget about it, and then they delay getting vaccinated and so on. I think that is a big mistake. I think it's very important to just push through vaccinations and get as much as you can done, because at least it protects you from severe disease, even if it doesn't protect you